How about this? Another Forex setup. You guys aren't going to be able to handle all this awesomeness. Hi, this is Tim from TradingStrategyGuides.com. I apologize for the lateness of my video on Wednesday. I got back from my trip to Indiana really late on Tuesday, and there were lots of charts to mark up. I usually do that sort of thing the day before, so it took me a lot longer to get the video done than normal. I promise to do better. How do you like my new intro sequence? Thanks to Ben at Trading Strategy Guides for that one. Trade what you see, not what you think. Oh, and today I'm introducing a new segment that I call Factoid of the Day. I'm going to give you a small piece of newsy info that I found fascinating. Hopefully my fascination and your fascination will agree. Here we go. I'm going to start with open trades, then move on to the Factoid of the Day, and then the US dollar Canadian dollar trade setup. Then we'll get to today's trading maxim. Stay tuned. Remember to click the subscribe button and hit that bell so you don't miss any of our trading goodness. Let's take a look at our open trades. As I mentioned Thursday, the S&P 500 hit our target right here, and now it's kind of going sideways. Hasn't hit the break-even stop yet, which is right down here at 29.72. So we're still going. I'll move the stop up if we get a new high up in here somewhere. Well, Apple zoomed right up and hit our target on the very next day after our entry. Then it popped up and pulled back and did not hit our stop down here, and now we're just hanging out waiting for it. Well, the pound CAD just pulled back right after our entry right here at 166.10. Did not hit our stop. It's pushing back up again. We'll see what it does. Waiting for it to hit that first target. And the US dollar Swiss franc from last week's video closed above the range right here on Wednesday, closed back inside the range on Thursday. Just hate it when it does that, right? So in and out for a small loss of 45 pips. I'm going to watch the volume and the volatility on this pair for a few days and see if it continues to drop. If it does, I'll redraw this range right up there and we'll give it another try. And that's the extent of our open trades right now. Now it's time for Factoid of the Day. Well, I totally feel like I need some kind of intro music for this, so I guess we'll be working on that. Here's an interesting piece of news. Amazon is going to start taking cash for purchases. Well, maybe start is a little bit too strong a word. It kind of takes cash for purchases now, but how do you suppose this new thing is going to happen? Well, they're going to have something they're calling Amazon Pay Code. If you select Pay Code as your payment method on checkout, you'll receive a QR code, which of course is sort of like a barcode, and you'll have 24 hours to go to a Western Union office and hand over the cash. They say that 80% of all Americans live within 5 miles of a Western Union. And while we're talking statistics, apparently cash is still the most frequent payment method in the U.S. to the tune of 31% of all transactions. So I guess Amazon wants a piece of that action. Well, leave it to Amazon to come up with new, inventive ways to make money. All right, let's take a look at our USDCAD setup. As you can see, the USDCAD daily chart has a really nice bear flag right here. As required, the bear flag needs some bear to set it up in the form of this downtrend. Then the bear flag is this parallel channel in the opposite direction of the trend. We anticipate this to break to the downside, and I will only take a short trade on a daily close below this flag. We have a nice decline in the volume average, and the volatility here, which supports the consolidation. And of course the volatility is measured by the ATR, or the average true range, which is simply an average of the length of the last 14 candles. Here's the plan if you hadn't figured it out yet. We're going to sell a daily close below the bear flag. On the breaking candle, to enter a full size position, we want to see the volume bar reach all the way up here to the volume average. If it doesn't reach the average, but it does at least reach 75% of the average volume, I will open a half size position to reduce risk. You can calculate the percentage by taking the volume number here, divide it by the volume average here, and you should get 0.75. Well, that's kind of an ugly 5, isn't it? If you don't get at least 0.75, don't enter the trade. The stop loss will be 1.5 times the ATR. The first target will be 1 times the ATR. So that means on the breaking candle, you'll look over here to find out what the ATR is. You'll multiply it by 1.5 to determine the stop loss, and you'll place that stop loss above the entry. So if the candle comes down here and closes, you'll measure from the close 1.5 ATRs up to the stop loss. Your target will be 1 ATR below the entry. If after entering the trade we get a close back inside the bear flag, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically the way I handle this is I use 2 positions. The first position has a hard stop loss and a hard take profit at the appropriate prices. The second position will have a hard stop loss and no take profit directly associated with it. I also only risk about 2% of my account on each trade. No single trade should make or break you. And that's the setup on the US dollar, Canadian dollar today. Please remember, I'm not trying to tell you what to do. You do you, boo. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've got a trade management plan that works better for you, by all means use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology to find the best strategies for your own trading. That's probably the hardest single thing about trading that you will have to learn, is understanding yourself. It's the most important part of trading in my opinion, and I use my trading maxims to help me handle my personal psychology. And today's maxim is brand new. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. I get these maxims from all over. Sometimes I write them myself. The purpose of my maxims is to motivate me to discipline. Discipline in trading as well as other areas of my life. I suggest you start your own list of maxims. Things you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And here's our brand new maxim. Tim's Trading Maxim number 62. Make your decisions in advance of the emotions so you don't have to make them in the midst of the emotions. You probably heard this in Wednesday's video because I wrote it for Wednesday's video and decided it was worthy of inclusion in the maxims. I amaze myself sometimes. What I'm referring to specifically here is your trade plan. Earlier I was describing our trade plan on the USDCAD. The plan includes contingencies for all the possible combinations of price movement that can occur before, during, and after the trade. When you're in the heat of the battle, so to speak, you don't need to be making big decisions. That's an emotional time. Once that trade triggers, you need to know what you're going to do and how you're going to handle each eventuality. I find that it's much easier to be disciplined if I have rules set up in advance and I don't have to make decisions during the trade. It's especially important if you're a day trader and you're trading on 1-minute charts. But it's valid for any trading. In fact, it's valid for any venture you plan to undertake in life as well. Plan your trade and trade your plan. Remember our USDCAD trade plan here. We're going to sell a daily close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And be sure that you don't miss any of my trading picks. We've been in a little bit of a slowdown right now, but still really profitable on these. So sign up for my free trading picks email list to be sure that you don't miss them. I'll be sending out about 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll get to see them first. Plus, you'll get first notifications of anything special that's happening. And the best thing is, free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one and maybe some extra Q&A or training on Wednesdays. And your assignment this time is to let me know what trade management rules you like to use. Help out other traders by commenting below on rules you're using that are different from my rules. I love to hear about new ideas. And of course, don't hesitate to ask any questions you may have. I try to answer questions in a timely manner. Follow me on Twitter. Sometimes I post things in there. I'll put my Twitter link below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next time.